to account a company that we know there are 800 companies and caught up in the Panama Papers that use the services of this law firm. Is it, are our laws as comprehensive and as thorough as the UK laws that have been passed recently, where there does seem to be a presumption of a minimum tax rate in the absence of cooperation? I'm happy for you to take that on notice.
So, Senator, I think, just to clarify, are you referring to the deferred profits tax, the UK deferred profits tax?
Partly that, and also the absence of cooperation, where I think in the UK that have gone down that path.
So, as I understand it, in the UK, the deferred profits tax has two elements. One, which closely aligns to the multinational anti-avoidance law, which we have implemented in Australia. The second element, which reinforces the position that a revenue authority can levy an assessment, in a sense, on a default basis in relation to transfer pricing type matters where certain indicia are present. Ultimately, as I understand it, that second limb, the company then still has the opportunity to assert normal transfer pricing rules. What it does is it means that discussion is had on the basis that the money is in the HMRC's pocket, not in the taxpayer's pocket. Can
I just circumvent this? I'm sorry, and I hope for you to provide more details and notice. Just, if a company is doing business in a place where secrecy provisions still apply, such as in Panama, ought there be a presumption of an increased rate of tax to be paid or a default tax to be paid where the company is engaged in a secrecy jurisdiction?
So again, Senator, I'm trying to draw the distinction between fraud and avoidance in a value chain.
And I'm saying if a company is operating out of Panama, for instance, should that raise a red flag that has consequences to that company in terms of a default rate of taxation?
Basically, yes. People don't normally go to Panama for straightforward business dealing, so there is a presumption that there's something that we clearly need to look at there. And rather than differential tax rate, we need some basis to calculate what we think the income should be that they have not paid tax on, and we take a lot of time and effort and care to try to get that right. Where the increased tax comes is for the level of penalty, right? So it was 30% tax if you're a company, and by the way, we're levying 75% penalty. So you're paying whatever 75% of 30 is on top of that. So you're getting quite a high 50% tax rate.
Sure,
so that's the way we get to the high rate.
Because I do want to ask a couple more questions.
And then we pay interest. So, right. So you've been doing that for 10 years, so we're on interest on that compounding.
But given that your job is made much more difficult with these secrecy jurisdictions, would it be inconsistent with your approach of taking these on in the serious nature that the ATO has, to basically say, you operate out of a secrecy jurisdiction, there will be consequences and presumptions arising out of that? In
the extent that there will be consequences or a presumption that we will crawl all over everything you do, that's fair enough.
No,
yes.
A presumption of paying a minimum rate of tax.
Well, we've still got to have a base of calculating it. You see, this is the problem. You could have a company there for some reason, who knows, that you disclose the income every year, and that's all okay. If it's fraud, well, yes, we will put 75% penalties on, but we've got to get we can't just plug a figure in and say we're going to tax you on that, because we get criticised in other places for being heavy-handed on people. So we've got to be very careful.
But you're not being heavy-handed. But it's
go to the house, and they say we're not doing it now.
Mr. Jordan, it's a little different involving those secrecy jurisdictions, is it not? I mean,
it is difficult. It is difficult by the nature of their activities, and they try very hard.
It's different from other countries where there might be transfer pricing. Okay.